The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time at 877-927-6648. And I'd love to hear from you. Very interesting day, just kind of a nebulous market right now, holding steady. Dow's up 10 at 18,492. S&P's up 238 at 2172. Comp index is up 8 at 5225. You've got the VIX index now down to 13.41. It's in the teens, but I think it's going to be pulling back just a little bit more. We'll see. Big day tomorrow with Yellen. We'll get into that. Got gold. That was very interesting. GLD is down 14 cents at 126.19. Gold is down 4 at 13.24. The dollar is down 10 cents at 94.68, and we've got crude oil. Let me just say high-grade copper is up 0.32 at 2.5. Just stuck in that range, not looking too great. And silver's down a tad. Bonds are down 730 seconds at 172 and 130 second. And you've got, where is that copper contract? I think I lost it. I'll have to put it back in here. Let me just do this. Copper CL, when I last looked, copper was up a little bit. 47.07, up 30 cents. Yeah, this is going to be very interesting. Let me talk about the different things. And a whole bunch of questions yesterday I couldn't get to, but I'll get to today. I've got a bunch of questions coming in today that I'll get to. So let's do this. I want to run those questions by because some of them were really good. Actually, all of them are good points. Some of I were just repeats of things that I've been discussing, but that's okay. Now, what I was asked about just a moment ago. Well, first of all, I've got the crude oil chart up. The weekly crude oil, you see the decline that we just had from this peak B. I spoke about this yesterday. It looks like a single leg A up with a stochastic pulling back sharply. But the MACD is still holding well. So I'm going to put this together with the XLE. I want to show you something. Let me move the 120-minute chart away. And now we can look at this with the 3 time frames of importance: daily, weekly, monthly. I'm going to go to the USO just for the moment, because that's a very similar chart. And here we've got a peak C and a pullback. And the pullback is very orderly. It's an alternating down, up with lower lows. And today, so far, we haven't taken out yesterday's low. What's really important about this weekly chart, and I want to do this, and I know that I'm told very often that there is not a direct relationship to the USO because it gets reconfigured at the end of the day, all that sort of thing. Believe me, the chart pattern is very close. It's close enough that I can at least discuss it because I've got a lot more work done on it, and it hasn't got that sliding scale that the crude oil continuous contract has because it gets smoothed out every month when it goes, or the new contract. This way, this is it. USO has a low that is going to stay at 767 back in early 2016. It has a high that was made just recently in the high 12s. And now it's down. It pulls back to the 9s, and now it's at 10.88 in the weekly. This candle is going to be really important because by Tuesday of next week, it's just 3.5 trading days away. If Yellen says something, and I don't see just exactly what she can say within the context of this being a really important for everybody political cycle. And the Fed doesn't want to be responsible in any cycle. They don't want to be responsible for a change of where you can pinpoint and say, the Fed did this and the market tanked, and now the party in power is going to lose because the other party is going to say, look what's going on. All I'm saying is that I don't think the Fed, she can talk about December, but she can only talk about it as if in December we'll probably make some kind of we hope to make some kind of a decision about rates, and they could go up a quarter. That's the best that she can do. The worst that she can do is to actually say we're bumping up right now, we're bumping up, we are going to bump up in December. And that she doesn't know what the consequences would be. and they've been so cautious up until now. Why at this point, the edge of the cliff, why would they do anything? Cut, we're finished. Let's go to the USO. If the USO by next Tuesday is taking, it's at 1087. If it closes under 1043, let's call it 1040, just argument's sake. If it closes under 1040, that's suggesting that the weekly chart is failing, and there are a bunch of things going on that would suggest to me that crude oil is going to have a difficult time rallying and holding, but at the same time, there is a consolidation area after a massive decline in the USO from almost 40 down to the, what did I say, it was a 767 level. This is, you can expect a range trading oil. I think later on, we're looking at oil going much, much lower. But just in the meantime, I'm saying to you, under 1040, it can go lower. But the chances are that if by Tuesday it's above the candle of 3 days ago, above 1118, let's say 1120, it will tackle the high of the 19th of August at 1138 and go to leg D. And the moment it goes to 11, if it can go to 1150, 1171 is the 200-period exponential moving average that it hasn't even seen. It doesn't even know it exists because it's been a little bit, it actually touched it. No, that's not right. It does know it existed because it just touched it on the 9th of June of this year, and then it pulled back again. So yes, it's made friends with the 200-period exponential moving average, and if it can go above peak C, that was 1134, the good chance that it'll try for 1171. I just think oil is in a trading range, unless the Fed says something that really knocks the socks off so that dollar, instead of declining sharply, screams to the upside. That'll take down gold, it'll take down crude oil, and it'll probably take down the market. Now let's also look at, so that was the question I had. I'm just at the same time while it's on my mind, FCX was asked about, that's Freeport McMoran. I don't think the copper and minerals is acting very well. I think it's broken the 200-period moving average. Now that's going to be a repellent zone, 1134. It's trading at 1101, down 7 cents. I would not be surprised if you're looking at Freeport McMoran testing the rectangle formation in the weekly chart, and at some point it's in the mid-10s to the lower 10s before it gets to the 14s. So I think it goes down before it has a rally even to the 13 area. Okay, Freeport McMoran. Let's just go through a couple of other questions here. Let me just do it in order. So Frank had sent me a nice email just suggesting that I look at the consensus report for earnings projections because we've been looking at Alta. This has been the most amazing stock on the stock market, ULTA. It has earnings coming out today after the bell. I suggested that we shorted it at 274.61. I also put a stop of 274.61. I had a 2.40 stop, 0.87%, a lot less than 1% risk we took yesterday. And then it popped up to 278.63, took us out, and then dropped sharply. And today it's trading at 272.95, down $1.0903. My reasoning was that everything I was looking at, including the 120-minute chart, yes, there could be a little bit of a pop to the upside by the end of the day before the earnings report comes out this afternoon. But everything about it says to me, if it wasn't earnings, I would have called this a likely peak F with a move down to the 260s coming real soon. I'll be right back. Basil Chapman, Dow's up 9, S&P's up 2.25. Be right back after these messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. I meant to show the 10 minutes. Actually, I meant to show the 2-minute E-mini chart because I had some nice signals there. Completely forgot. Of course, I did this pre-public with TFNN online. I did it as I was preparing, and it was shown in the den. But this is leg C now in the 10-minute chart. Is breaking out. The resistance should be right there at 2177. We're at 2176.75, and we've hit already 2177.25. So we're getting close. Now, what's really important about this is that I still think we're just in a kind of a trading range, and this is the most important thing. We've just gotten to a D in the 2-minute chart, the second peak D from the low that was made earlier on at 2167.75 at 9:36 this morning. So I just wanted to show you how it works. Oh, I should also show you now. We're going to go to calls in a moment, but I should show you. Yesterday, remember, I had this left side, right side, and now it looks like history, right? Oh, big deal. But at the time, it was a big deal. Yesterday, during my show, I said that there should be a left side, right side price time match. It should take you to 82.25, and I think I'd said by 12:20. I'm almost sure I said it or I typed it or something, and we did that exactly. Look, there it is. Went to peak B, pulled back a tad, went to C, and they made an arch formation failure pattern. It's a C minus, because it broke that trough D and it plummeted down from the 2180s all the way down to the 2168.75 low of yesterday at just before the close. So this is going to be very interesting because I think we are in a trading range right now. It's just a wait-and-see attitude for another day or so. So back to Alta for 1 second. So everything about it said that there was a peak D in the 120-minute chart. It closed lower than we actually started the short, but I just wasn't prepared. This is a stock that can jump 8% or 20 or 14% even when the good news comes out every quarter about its wonderful earnings. Ulta Salon Cosmetics and Fragrances, great company. I just think it's due for a pullback. So we have a plan, but it's a plan just as an experiment to show you that you should not be afraid even of earnings reports. If all your technicals are in place, you just got to put a stop, and then all you do, you got to make the position way, way lighter. You're using it as part of your education, and your education should not cost you very much, because for most of us, it's cost a bundle already, and when you finally get it right, that's the satisfaction, but on the way, you need a lot of gumption. So in its leg F in the weekly chart, Alta trading at 273 down 97 cents, and it's a huge leg E. This looks like a right arm extension Chapman wave. Let's see what happens. We'll talk about it again tomorrow. And thank you, Frank. Yes, you're absolutely right. I've looked at the reports, and earnings look like they're going to come out very. I think there's going to be a little disappointment somewhere, and that should pull the stock back. We'll see. It's not a big deal. The next thing I've got is Tim in Denver. And hi, Tim. How are you?
Hey, Basil. Thanks for taking my call.
My pleasure. Yes, you'd like to look at one of our favorites, right?
There you go.
IBB. Folks, the IBB is trading at 288.97. That's up 274. iShares, NASDAQ, Biotech, ETF. We had a short position. We broke even at 295.01. It then plummeted down to 285.32. So it happens. Well, we got a 0% gain and loss. No problem there. I had said to subscribers there could be an a cup formation, a double top formation, and if it doesn't close decisively above 299.48, then it's the dreaded H pattern, the lowercase h, that is very successful when it breaks the arch. Now this has broken the trough, which is equivalent to the arch formation. So 288.01 was the low. It pops up to 299.25. Didn't take out peak E. By the end of the day, I might put a down arrow here. I should do it already, but I'm going to wait for the end of the day. And now the question is, my thinking here is that you've got a question that has to do with, is this the time to short?
Correct. Yeah, I'm going to buy when I do it, I'll buy the LABD, which is inverse inverse.
Right. So as the IBB drops, this one's going to go up. The one that you want, the LBAD, goes up.
Yeah, LABD.
Yes.
Yep.
And that'll go up well, it doesn't go exactly, but it's pretty much a threefold increase. Now, my thinking is this. The reason why I did nothing today and said we're just stepping aside is you see this 200 period exponential moving average here, the coral color thick line, and you see the 200 period simple moving average has dropped lower. It's crossed negative. What it's saying is that with all the negativity of the MACD and the stochastic, IBB, I might be completely wrong about this because I want to be selective about buying. In this case, what we usually go for is the BIS, the 2 times short. I wanted to hold off because we didn't have it. If I was in the position already from 295, I'd say, fine, just lower the buy stop. And if I was in the BIS, I'd say, okay, raise the stop. We're not in it right now. And one of the reasons why I didn't want to do anything today, my thinking here is that fund managers are looking at this, and there are enough fund managers to say, fantastic, I missed that last move up. I think the IBB, the Biotech, iShares, NASDAQ, ETF is in a great position. I want to start stepping in with some stocks that I love. I haven't been able to do it. I missed the big move up. I didn't believe it. Now I believe it. So I'm going to have a little patience. If I miss it, I probably will say, you know what, if it goes 1 penny below yesterday's low of 285.32, I might start a small position because that's starting to impact the weekly negative. That will impact the weekly negatively. But if you look at the weekly technicals, there's an H pattern that's gone to the potential for an M pattern. All I need is to see 303, and I have to change that from an F to a potential B. And then what we have, there's a ton of talk right now about smashes and crashes and washes and dashes. And all I can say is we are short. I haven't really gone heavily short because I still see residual strength. I don't know how it can play out. We were talking a moment ago in the den. Pete D was saying that the IW, what was it again? Was it the IWM? I think it's the IWM. One of them has only gone to a C. Yeah, the peak in the IWM, the Russell 2000, is only at peak C. Everywhere I count it, I can't get anything but a C. There's nothing after a G. It has to recycle. And the MDY, which is the mid caps, is also in peak C. And I had patience before to say that we have to wait a little bit before we do anything, because this kind of pattern where it just creeps higher and also creeps with slightly higher highs and slightly higher lows can create either an oval or a rectangle formation. And now we can see in the IBB the rectangle formation. Look, it's perfect. It did it in an hour and a half. In fact, it looked great mid-afternoon, and then suddenly kaplop, it went down. But that was because of Milan Labs, I think, and other things. So I'm looking at this and I'm saying if the IBB can rally even a little bit from 288 to 292, 5 points is not a big deal for this thing. If it can get there and we have no bad news tomorrow from Yellen, then I would not be surprised if that I am expecting a 1,000-point decline in the Dow at some point. Then that might be delayed for a little bit. Can you hold on and I'll give you a strategy that I think might work for you?
That'd be great. Thanks, Basil.
Okay. We've got Tim in Denver. We're looking at the IBB. I know a lot of people are looking at the IBB. We are looking at the IBB all the time. And I'll tell you what my strategy would be. We'll be right back. Dow is up 6, S&P's up 2. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back. And we're back with Tim in Denver. We're looking at the IBB trading at 288.06, up $1.683. So, Tim, the more I thought about it during the break and more I looked at different charts, my contention is that whatever the Fed does, if you go back in history, you'll find that maybe once, maybe twice, a comment has really sparked a massive move either up or down. But very rarely has that been the ictus, has that been the point, exact point, inflection point, where it gave a buy signal or a sell signal. Excuse me. Invariably, you were already in that position. So I've already got a sell mode in the Dow on the daily, but it's not so far it's holding well. The weekly hasn't even gone to a peak D yet. So I don't, because it's a LABD, being incorrect twice, maybe once, but maybe twice, can be way more expensive than being right. Because being right, this really has to work. Like yesterday was incredible. That was just really a once in a year type move in a day, in an hour and a half. So I'm just going to suggest to you that maybe for the starter position, you actually try a little bit of the BIS, so that it's not quite as volatile, and you'll be able to add to that position, or whatever it is. If you don't like to actually short, but you want to go long something that's already short, what I want you to point out is, look at the, I'm going to go to the LABD. I'm going to discuss something, Chief, this is technical Friday. This is already down at 22.45. It's down 0.93. It's already down 4%. And the IBB is got like $1.50 up. So the moves are being exaggerated. The same as if I look at the volatility index. If I look at my 120-minute chart, I'm already at peak D in the volatility. Is it a leg D or peak D? I'll look at it in a moment. That's really like the Dow had dropped 350 to 400 points in the last few days, and the S&P should have dropped 30 to 40 points, and it hasn't. So there's a lot of nervousness, a lot of put buying, and a lot of protection being offered right now, or being bought. So I think it's a little bit of an aberration, and my thinking here is it's going to be a surprise. It's going to come out of left field. It'll be something that we never thought of. There are just too many people right now saying, massive move to the downside, watch out. They could be right, and we kind of prepared for it in a little bit of a way. But I've got one foot in the brake, one foot on the accelerator, because I'm looking at certain areas that are holding very well. So I'm just going to make the suggestion, if you have the patience, if you're prepared to do it, if you want, you could just nibble at the LABD. I'd prefer if you stuck to the BIS. It's not quite as volatile percentage-wise. But I would then add, if it did take out by 1 penny, the low of yesterday, 280, the IBB took out 285.32, that's where I would add. I'd be prepared to hold off and see if it can get to the 291, 293 area. That's when we want to see if there's going to be a turnaround in that H pattern in the IBB. It looks like yesterday was just forced selling. People were just throwing everything out. I'm looking at a little mini rectangle formation with a bounce towards the 291 area. I'm quite prepared. If it takes out yesterday's low, then I'm prepared to look at the short side. I'm making it real simple. I don't know if that helps you, but if you want, you could just start a little. You could start a little position now. I just wouldn't get carried away until I got more confirmation, because I'm looking at it and I'm saying, wow, if I was a fund manager and I'd missed out on the big move and I didn't do pure technical analysis, I'm waiting for a position to buy. This is what I think is happening right now. That could go on for a few days.
So maybe a bounce to 291.92, and then maybe
and that's for me. That would be a safer way to start a position on the short side, because at that point we're right in the middle. If it's going to break to the upside, it probably won't stop. It'll keep going. It's not going to stop, pull back, and then go. I think if there's a move back up in this from the ugly candle of yesterday, it's going to be really quick. And if it's going to fail, you'll know by the end of the day. The IBB will be at back at 286, and tomorrow when Yellen talks, it'll either break down, something will happen. I've already got the signal in place, so I'm prepared that if the Fed says something negative and we go down, I'm prepared for that. At the same time, I'm actually looking to do some buying on the next pullback, because I think that it's not going to be as deep as many people think. That's just my thinking.
Thanks, Basil. I appreciate it.
Okay, so all I'm saying, a little bit of caution here because it was an extended move yesterday. See if it can bounce, and then you'll get a better entry. Thank you so much for calling, Tim. I hope that helped you.
Yeah.
So, folks, let's go back to Let's go back to the story here. So, I was asked about some of the Dollar General and stuff. What was the question? DG, Dollar General, Walmart, Disney. I guess these are what folks look at. So 5, which is 5 below, had a sharp pullback. It's coming back today, down 62, but it's already made peak D in the weekly, peak D in the daily, and it's an IPO, so it's only made a B in the monthly. So this is holding okay. It's not great. If I look at what was a Dollar General, DG made a peak D just recently in July, and just above 96, and a peak F. I didn't even know that. I forgot all about it. A peak F in the weekly chart and a peak E if this continues into the end of the month, which it probably will. So Dollar General is different. Dollar General could very well trade between 74 and 83 in the next month and a half. So that's different. And just real quickly, Walmart, we've got Walmart, made a peak E. There wasn't an arrow. That should have been the down arrow there. A peak E in the in the daily. And you remember we were talking about this. I said, I don't know how to do this because I've got a peak C and the technicals are fading. The weekly made a right arm extension, Chapman wave, sharp pullback. And yet the weekly chart is still technically quite good. I still think that Walmart at 71.59 is coming down. It's minus 64 cents. I think it's going to hit 72.9. That 70.29. That's going to be the test of the 200 period moving average. Doesn't look great. And then just real quickly, the RTH. We wanted to short this the other day. I said, we'll hold off. I'm sorry now that we didn't because it's hard to short. You have to go to the XRT, which had a different, slightly different. It had a weaker chart formation up until 2 days ago. Now it's a little stronger. I don't know if I want to do the shorting because I think it's a mixed market. I think some of the retails are going to do okay. I had a quick question about, so many questions. I'll have to go to it. Let me just get to the XLF, which is a question here. Doing nicely. It's a 24.09 up 6. We have a long position in this. This is the financials. I didn't add to it. I just needed at peak D. I just needed to hold off for a little bit. But the question is the XLF and Bank of America. I'm guessing that this is now 25.25. I'm just going to say that there's a chance that this is F/B, and that. Yeah, my rates might actually increase a little bit. I don't know. But this is now D in the weekly chart, way behind the left side, right side price time match. But we'll see because it's acting well. And this is what I mean by the rotational aspect of any correction here. We're in a correction. I don't think I have time for it, but I'll try to get to it. I'll show the chart in a moment. Just quickly as we go out, here's that peak D. There it is, peak D in the 2-minute chart. Remember I said peak D, you get your deepest correction. You've got it once, you've got it twice. We'll see where this goes. I'll be right back. Basil Chapman, Target Conditions Hour. Dow's up 9, S&P's 2.5.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and let's look at a couple. I was asked about WU during the break. A nice-looking stock. Who knew that Western Union could have a comeback like this? I have my background in my mind. I'm going through different things, why I think it's doing well. But in the meantime, back at the ranch, the weekly chart, I think this is recycled to, I'm calling it leg B for now. I have to change my mind at 21.47 if it breaks 20.50 support. I'll have to say, oh, maybe it was a peak F, but everything about it looks like it's restarted after that move there. I'm even going to put, no, actually, when the MACD flattens out like that. All right, let's just keep it like this. It's acting very well, and it certainly looks like the monthly chart is going to make a leg D above 22.84. So it's got $1.50 to go for leg D in the monthly chart. Must hold, intermediate term, it must hold 20. Let's make it as simple as that. Okay, and the question I had about OIH is just in a choppy sideways move. It's at 28.61. It's the Market Vectors Oil Service Index. If it at 28.61, if it closes under 28 by coming Tuesday, not good at all. If it happens to bounce from here, 28.61 to 29.30, I'd say, hey, that's nice, but it's still in a rectangle formation. It's still in a trading range. It hasn't broken down there. So that's OIH. EEM, I think I did yesterday. I'll do it again today. EEM made a peak F top on the 15th of August at 37.98. And I'm suspecting that this is going to be a clue that if the EEM at 37.03 breaks 36 support, I'm not going to go all the way down to 35.55. I think it's 36.20 actually. 36.50. If it goes under 36.50, there's a good chance that the weekly chart 36.22 will be hit, and that'll be a sideways consolidation after hitting the 200-period moving average at peak E, if that's the peak for the week, right here in the weekly chart, and leg B in the monthly. It's a nice improvement. It's got to steady itself. It can't break down from here. All these charts are close to pulling back sharply, the ones that have gone to D, E, and F, but in the dailies, and yet they're still holding very well in the weekly charts. Rand, a question. We used to have this. We made a fantastic series of gains in Rand. We had initially, I think, at 157 and went all the way to 4s and 7s. So I just see nothing there. Rand, it isn't acting all that weak. It's a kind of a takeover talk candidate. So I'm just going to I'm just going to leave it now because it doesn't quite fit anything that I can talk about cogently. It just had some crazy moves, and that has to be because of the outlook. So the IYT, once again, the weekly chart has been the question about it, about the IYT from Adam. Now, Adam, you'll see that this channel line, this Chapman Wave inside track resistance line, look at that. Right there. You see that? It's just stuck. And until the IYT, the Transportation Index, can cross over the week of the 15th of July, the 144.41 area, I'd even say 146, 5 points, 4 points from here. It has to do that to show that it's got leadership again and that it's not making either a rectangle or an arch formation in the daily that says, hey, I just need to test it. And even with oil coming down, it's done nothing. So I'm a little worried. I'm looking at it. I'm looking, say, at a CSX, same sort of pattern. Single, almost like a single leg A and a rectangle formation consolidation in CSX core. Next question I had. I did the XRT. Guess was look at that. Leg D spikes up 18.29, 3.39, up 22.25%. Guess is Guess Inc. That's the clothing, young people. I think it's for young people. Massive move up. It looked terrible just yesterday, and today it's. That's the thing. That's the reason why I'm saying that. You see the way Guess pulled back sharply yesterday, but it came down for weeks and weeks and weeks, and then suddenly there's good news and it spikes up. I'm anticipating, and don't trade in this, folks. Only people already do this every day, already used to it, can do this. That's why I'm saying I think Ulta can, in fact, pull back from here. That's the reason. That all the news is there. It's in the stock. Now all that can happen is that it starts to digest the gains. That's just my thinking. Let's go to XAU. Good question. XAU is at 97.39. It's up 2.05. Now this is a little different. Remember yesterday I said that what was I looking at? Was I looking at GLD? And no, I was looking at the GDX. I was looking at the GDX and I got a lot of questions. And I said, if the GDX closes, it has 3 days maximum. It should be 2 days, but I'll give it 3. If it can close above 27.44 within 2 days, I say maybe go to Friday. That'll say at least it can have a decent bounce, maybe to the 28.5, 29 area, and then comes back and does a retest. And that's exactly what happened. It's up today, 70 cents, 27.67. And it held the dash Chapman Wave inside wedge trend line, and it's targeting 24.80, but it might not do it just yet. It could have a bounce, and the gold stocks have been hit terribly. So you can expect that there's room for a bounce, but just a bounce. So I hope I answered that question. Next one was EXPR, Express Inc. Okay. Oh, I didn't do this. And this one had a failure pattern. It went peak A, B, and then just suddenly dropped out a bit. No, this has been going down for ages. Express Inc. I don't think that's Express Scripts. No. Anyway, no. EXPR. Oh, yeah, maybe it is Express Scripts. No, you wouldn't say that? Anyway, it doesn't look good. And I'm not sure what the question was. Oh, just to say that they're weak in this particular sector, yes, very weak. Very weak, down 59%. I'd say that that's weak, yeah. So ESRX, that's an ESRX. I knew Gator would know that. We both know this one very well. Express Scripts Holdings, online pharmacy. Oh, my God, down 3 points at 73.22. It went to a peak A, B, C, D, E. Oh, look at that. I missed it. Was it earnings or something like that? Well, whatever it is, that is a smack. And you know what? They were taken over. I don't know if they did the taking over or Priam. Well, one of those companies did the takeover. Medco. Yeah, I think Medco did the takeover, and they kept it at Express Scripts. Online pharmacy, 94.61 was the peak G high way back in January, I think. July of last year. Plummets down to the 66 area and then tries to rally. It rallies again. It goes to 80. And then what happened? Was that a round number high? 80.02. 80.02 back in July. And now it's trading at 73.14. Horrible move. So to tell you the truth, I think the next sector that's vulnerable the XLV. So that might put the IBB in the same area. So that's the reason why I'm not saying don't short it. I was just saying to Tim, try to get a better entry. That's all. So I'm looking up. There goes that buzzer. Completely forgot about it, but it's off. I got that one quickly. So XLV is the S&P Select Healthcare Spider Fund. Looking quite vulnerable, actually. So I'd be careful with this one. Peak F in the weekly, peak D in the daily already, and leg B in the monthly. Watch this real closely. It's coming back after a sharp move down yesterday and today, but I'm going to keep my eye on there. We have no position in this. Now, there are two things that I want to do. I said I'd get to the bonds. Bonds right now, just stuck. So I want to talk a little bit about bonds, and I want to show some of the let me put this chart up so I don't forget it. That's the chart that I wanted to show that shows the Chapman wave support levels and resistance levels. I'll be back straight after this break. Basil Chapman, Tiger Technicians Hour. Dows up 4.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back. I just wanted to put this chart up. There was that peak D. Remember peak D? What's the objective in the Chapman wave? To at least get you to the Ds, and then other things can happen. We had that twice, and now it's pulling back. It's gone to a trough C. Let's see if that holds at 121.74. Now, I wanted to do that, and then I wanted to go to this. I especially put it up because I knew I'd forget otherwise. Let me show you something. In this Chapman wave program that I have that pinpoints resistance and support levels, look at all the resistance and the diamonds at 185.69, 186.10, 186.91, high up at 188.21. But You've also got the resistance at 184.70, 184.12 that got broken. Now you've only got two support levels, 183.82 and 183.71, and we're trading at 184.61, having pulled back a little bit at the opening and now trying to find some kind of support. Look at the SPY. The SPY, that's the trading vehicle for the S&P, massive bunch of resistance levels at 220, 36, 220, 219, 90, 221, 22. Has a couple of support levels, 216.89, 216.24, 20, 214.96 deep down there. So it's right in the middle of this range. And that says to me that there could be a bit of that's the reason why I've been saying, actually, this only confirms what I was saying. I don't look at this very much, but I did. And this is my Chapman wave analysis of the 120-minute chart, which has worked out beautifully so far. We've actually gone to 5, but I don't think this is the real 5. I think 5 has to be a little bit low. Let's get out of that. What I wanted to show was this is the chart, and there's that peak E in the VIX index. So in the 120-minute chart, very often you get a bounce from that level in the market. Most importantly, what I wanted to say is that we've got the same pattern almost that you saw patterns repeat over and over. It's human nature. So this is the one that looks very much like the July 20th decline from the 18,000, I think it was 622 high, down to the 18,247 low. It's only 400 points. And I'm saying to you, the VIX has already rallied as if it had made that kind of a move. So something's a little weird there, unless the fund managers are really just buying the insurance because they really feel strongly about it. So what I'm saying is we've already gone 1, 2, 3, 4, 5, 6, 7, 8 down days. And here is 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 concluded. That means tomorrow could be a conclusion of this whole thing. We've only gone to a C, and today we made a lower low than yesterday by 4 points, 5 points in the Dow. So this is going to be, and there you are. Look at that pink dashed up channel trend line support, but the MACD and stochastic are still very weak. Got that out the way. Just wanted to say that I'm looking at this and I'm saying that bonds are not telling me anything right now. If I look at the weekly chart, it's saying, hey, that's a peak D, and if it closes weak underneath the 9-period moving average sharply weaker, tomorrow I've got to have to put a down arrow on the weekly chart. So I've got a sell signal in the weekly. I've got a sell mode then. It'll probably be down at under 170, and that'll be a sell mode in the daily. Sell mode daily, only a sell signal in the weekly. And monthly chart hasn't done anything. It's still looking really good. And that's bonds. So I needed to go through that. Now I'm going to go through the VIX index between now and tomorrow. What you want to be looking for, the VIX index, if I can hit the right thing. I always forget that it doesn't automatically go there. VIX index is at 1355, up now only 10 cents. It has extended leg C, and that gave you that E in the 120-minute chart. Now what I'm looking at is at 13 in the 13s. Now you're starting to see some selling pressure. And if we stay in the 13s in tomorrow, this time at noon, because the Fed has said something at 10 o'clock tomorrow, this is what we've got to look for. The VIX starting to go into the mid-14s. This market is coming down a bit deeper. And if the VIX index goes under 13, that's going to be a good sign and we can have a bounce. We're on the cusp, yeah, at least a little bit of a pullback or a spike. But I haven't got any bigger signals than that. I'll be back later with Tom O'Brien. Have a great day. Otherwise, see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,